Welcome to the Learn to Trade course. This video will cover candlesticks. I will very briefly talk about the structure of candlesticks in order to give you some background into what candlesticks are. You can watch other videos on YouTube if you want to know more about the conventional uses of candlesticks. I will focus on what I think you need to know and how to use them in your trading. I hope to convince you not to waste your time on a lot of the other information I find to be nonsense. Okay. Let's learn about candlesticks and how to use them for trading. What are candlesticks? They are a way of visualizing price movement based on some form of measurement. The measurement can be time, ticks, volume, or range. All those bar types we covered in the previous video. So let's cover this fairly quickly and we'll do it basically. Head on out to Investopedia if you need more details about candlesticks, but I promise you probably won't need it. Okay, let's start with the candle on the left. It would be called an up bar, a bull bar, or bullish. Many ways to say that price has risen. The green box is the body of the candle. The ends show where the price opened at the bottom and closed at the top. The white at the bottom is the wick, or sometimes called the stem. It is also at the top. It shows the low and high of the candle if the candle does not close at the absolute high or low. Let me show you an example of how the candle was formed. The candle starts at the bottom. It quickly descends lower, then moves back to the open, and then moves high all the way to the top, and then it settles and closes a little bit below the high. I think I missed my calling as a graphic designer. The red bar or down bar or bear bar acts just the same. It starts at the top and moves down. Now that you know how they form, let's move on. I know I'm moving fast. Trust me, I will slow down and cover in detail what I think you really need to know. Here we have 5 bullish bars, or bull bars. They would be considered bullish because they are green. But are they bullish? We saw how the first candle was formed on the previous slide. How about the second? It opens towards the top, traded a lot lower, but returned to the open and then even exceeded the open to close higher almost at the top. Yes, this seems pretty bullish. Price closed up. How about the third bar? It opened low, traded all the way to the top, but closed in the bottom third. In reality, this would be a little bit bearish. It looks like the bears got the better of the bulls in that bar. The fourth bar is definitely bullish. Opened on the low, closed on the high. Bulls dominated the bears all the way. And the last bar, opened in the middle, traded down, traded up, and settled almost where it opened. Still a little green body, but really no one dominated the other. This is a neutral bar. Let's take a look at the red bars. Okay, here are the bearish bars. They look just the same as the bullish bars. They're just going the opposite direction. Not going to waste your time on this. We've already covered the bullish bars. Let's get on to the meat of the candlestick lesson. So here we go. Okay, here we are. We're watching what's called a level 2. This is from Jigsaw, and basically what it's showing you is volume traded at price. And what you will see is a volume profile in 2 of the columns, and you will see the bid and the ask, and also what is actually traded on the bid and ask. This is early morning, and so it's going to move a little bit slow. The volumes are a little bit less, but This is it. This is trading right here. Our machine overlords that do 95+% of the trading know nothing about candlesticks. They know about volume at price. They are algorithms. They're basically trying to do best positions. They don't look at patterns. They don't look at candlestick patterns. They don't look at moving averages. They don't look at stochastics. They're fighting for their piece of real estate and trying to get the upper hand and move the market in a way that makes them money. You can see it on many days. So if you study the level 2, you'll see that what's really important is where all the bids and all the offers and where all the trades are happening. It's that building of that profile that's going to mean the most. So let's go through a few more examples. We'll come back to this video and see some more of the trading, okay? But I just wanted to show you this and get you started knowing that candlesticks don't matter all that much. So if you could think of trading as a straight, not a straight line, but a single line, where every time price changed, it would just be a line that went up and down, and you wouldn't have any candlesticks. That would be price. So it's just that we kind of package it together in little units and put them in candlesticks so that it is visually appealing for humans. So let's continue on. Okay, here's a picture from Google Images. When you Google proprietary trading firms, and this is one of the images that comes up. Take a look around on all the monitors. Do you see any candlestick charts? I don't see any. I see ladder charts everywhere. And this is what the professionals are doing. They're looking at volume at price. This is what you need to know. If you want to know how to trade like a professional, you need to understand volume at price. Okay, let's move on. Okay, we're looking at a picture of what used to be UBS, largest trading floor in the world in 2008, and then what it became in 2016. Do you think you are still trading with people? No, you are trading with computers. Computers do not draw trend lines. They don't look at moving averages. They don't look at stochastics. They don't look at candles. I hope I'm driving home the point, but algos. You need to start to think like an algorithm. You need to understand what algorithms are doing and how they trade the market. And it's all about volume at price. Okay, let's get on with the rest of it. Okay, so we are going to use candlesticks. Realize that you can use volume at price, and it's called a volume profile, and you can draw it on your chart and you can see volume at price. This particular course is about candlesticks though. So how to use candlesticks. We're not going to talk about volume. So I think what's most important is the visual representation of the most current bars. But over time, what I learned was it was pretty important to pay attention to open, close, high, and low in candles. And the reason I'm saying this is when you print a lot of candles like on a tick chart, what happens is price tends to spend more time at locations that are trading a lot. So if there's typically a lot of volume at price where you have a lot of highs, lows, opens and closes. At one point, I wrote my own indicator and I called it Interesting Levels. And what it was it looked at candlesticks and looked at all the highs and the lows, the opens and the closes, and basically drew out the levels that had the most. And if I draw a couple of these, you can see right here on this chart, here's a level out of all these bars right here that we're looking back from here to here. These are the levels. These are the 4 levels that have the most open highs, opens and closes, highs and lows. Sorry. So up here, look. This is the past. How did it react when it got back here to the future? Look, it made a level. It made a level right here. Again, touched it, traded off, touched it, traded off, tested it. Look at right here. You have the bottom of this green candle bounced right off this level. Look across. You got a red candle rejecting from there. You can see a definite level between this bottom piece and this top piece right here, bisected right where this line is. It's kind of like bulls and bears fought down here, and then they fought over here, and then they finally fell. And where did they fall to? They fell down here where we have another level, and it bounced right off that level, right? This one doesn't seem to go anywhere. So it doesn't really lead anywhere, but if you look all the way across the chart, there is a level all the way on this other side over here. But I think that's my 87 level that completely failed today in my trading, but that's another story. So if I expand this out a little bit, we're going to use the volume profile over here on the side and look at this. Can you see that kind of between these two lines, you've got this extended profile? You got a shelf of volume right here. You got a shelf of volume right there. You can kind of see it right here, right? There's a little volume node right here. Can you see it down here? Let me see if I can move that just a smidge right there. Can you see it right here? So when I'm looking at candlesticks on a chart, and I'm trying to kind of draw in this, where in my volume profile I'm going to kind of trade, I'm looking at the highs and the lows, the opens and the closes. I want the symmetry that the bar brings across those levels. I want to trade with that symmetry. It makes sense to be with all the other people. I hope I'm kind of making that clear. So I'm going to jump off this and just show you a couple more examples of some pictures that I took, and I'm not going to force you to, for me to put the levels on. Okay, so here's another, this is just a picture. Here are some levels. I drew in the lines, kind of stop the video, look at it, see how there's shelves of volume, see how the candles line up, show how the levels happen on the right hand side. Take a look and see if I'm making sense. Let's take a look at another one. Okay, looking at this one, I drew lines all the way across the chart. I mean, to me, in my eye, I can kind of see the levels that happen in the future, that they're around those particular lines that we kind of drew in and how they play with them. So stop the video, take a look at it, see if you agree. Can you see the volume on the left and how it kind of has peaks and troughs where the lines are? Okay, last one before I bore you to death. I drew a volume profile on the top volume node there, and it sits right between those two lines that were drawn on the chart. And I think it encompasses the volume node pretty good, showing the lows and the highs of the volume node. So I think it's important that we pay attention to the opens and closes and the highs and the lows on candles. I think they can give clues where we should be drawing our lines when we draw support and resistance lines on the charts. So let's start to wrap things up, and we'll talk about volume nodes and volume at price in another lesson. Okay, so kind of in closing, we'll sit here and watch this level 2 here for a second as I talk. Told you we'd come back to this. I don't think the shape of candlesticks or candlestick patterns mean a whole lot. I think it's more about the amount of trading that happens at a level. I think it indicates you know, where people want to trade, levels that algorithms are defending or purchasing at or selling at. I think we can learn a lot more from volume at price, and that's what I base my trading on, is trying to determine where somebody is going to basically defend a price level in order to, you know, protect their position. I think the algorithms are very competitive. I think that they will protect their levels and will try and get price to move in a direction away from their levels. So I think it's probably controversial what I've been saying compared to a lot of the other videos on YouTube and stuff, because that's not what they teach. But hopefully I have made a good, strong argument, and that you'll be with me for more of the courses. So let's get to the final slide, and I'll sign this thing off. Okay, so this has been the video on candlesticks. I hope it was enlightening. I hope you enjoyed it. I hope you learned something. There is more to candlesticks, but they go more with volume, and we'll definitely talk about that in a future video. Hopefully you will subscribe to the channel in order to see more videos in the future. And if you have any questions about candlesticks or anything that I covered in the video, even comments, I'd love to hear them. Go ahead and place them in the comments down below, and I will see you in the next video. Take care.